Good morning, guys. It is Tuesday, May 14th, 2024. This Bathrobe business. I got the coffee and I got the news. So I didn't have a video yesterday. Like I said, I've kind of changed the trend with this channel. If I don't see stories that I think are impactful, I'm just not going to report them. Yesterday, I didn't see any real stories that are worth reporting. Unlike today, I think there's dozens of interesting stories that I'm going to only mention half of what I think is interesting. But today's a very tumultuous time in the market. So let's jump right into it. First story is actually kind of fun. GameStop meme stocks are back. So yesterday, Roy and Kitty posted on Twitter for the first time in 3 years. And then today, GameStop shares are surging 100% in the pre-market. And in addition, AMC is up another 90% as well. So make that if you will. I've got no real opinions on it. I was never really part of the meme stock craze a couple of years ago. I'm not part of it now. I just think it's a fun story. That movie, though, Dumb Money, is a really good movie. You should check that out. Okay, so let's jump into the big stories. So this one is from yesterday. So yesterday there was an article about how even Australia is struggling with a housing crisis. So why I want to talk about this. We've talked about, obviously, housing on this channel. We've talked about a lot of things, but we haven't talked about one thing that is always on my mind. And one thing I haven't really mentioned, but one that did come up during the Multipolarity podcast. I highly recommend you guys check out Multipolarity. It's a very smart podcast. It's hosted by geopoliticians, by economists. It's a small channel. But if you like Peter Zion, you'll like this channel. It's also, I feel like... Peter Zion is a little too pro-American. These guys are almost a little bit too anti-American. They're Europeans. But I feel like if you meld the two, you get a pretty valid opinion between them. But they talked about something that's been on my mind for a long time, and that's the financialization of the housing market. And I think that is one of the biggest plays that's going on within housing that we don't talk about. So what's financialization? Well, it's essentially treating homes like investments, using them as a business, et cetera, et cetera. Now, whenever this comes up, a lot of people like to blame BlackRock, State Street, these big hedge funds, private equity firms, et cetera, et cetera. Obviously, they contribute a factor. If you remember during COVID, when everybody was moving out of the big states, big blue cities, everybody was talking about how anytime a home was posted, there's cash offers. Well, there is an institutional investment there as well. But partly, don't forget, if you're living in California and you've got a house that's worth $1 million and you sell it, oftentimes you have 600,000 in equity that if you go into any other state, you could just throw that directly into a house and buy it cash. So a lot of the investment and a lot of the all cash buyouts that occur in those scenarios aren't necessarily institutional investors. It's just people that had tons of equity because they came from a state with property values being much higher than where they're moving to. I personally know someone like that. He's a in-law, but they lived in California for I don't know how long, like practically his entire life, and it just got insane. They had only like a 1,200 square foot home. They sold it for, I believe it was 1.2 mil, and they moved to Nevada, just into Henderson, right outside of Vegas. And for $850,000, they bought essentially what is a mansion. It's got a pool. It's he showed me pictures. It's this modern architecture. It was $850,000. He bought it essentially in cash because he sold his house and moved it into there. Now, that's a bit of a tangent. Let's come back to the financialization of it. I looked up the statistics. So how much is like BlackRock and Blackstone, how much are they actually purchasing of private residences? Well, it actually is only about 3.8% of the market. Now, then you go in and you look at how many baby boomers, and I specifically look at baby boomers just simply because they're the largest and the richest current population, right? Obviously, this is happening with Gen Xers. This is happening with Gen Zers. This is happening with millennials. The statistic I'm about to give you isn't isolated to any one age group, but I think the most dominant one is definitely going to be the baby boomers because they're still the richest one. So how many baby boomers own a second home? And that's about 15% of homeowners own a second home. So as you can see, the number of homeowners that are private are actually vastly larger than institutional investors. And a lot of them are doing it because it's an investment. They're using it as a second home. They're using it as a rental property. They're using it as simply an investment for retirement. This is a statistic that everybody tends to neglect. That part of the issue with the housing crisis is the financialization of the market, in the fact that homes aren't just homes anymore. They're treated as investments. It used to be said that a home is a good investment, but really what that was it's a smart financial decision. It's like when someone says, oh, I'm getting an education because I'm investing in myself. Obviously, it's not an investment from the standpoint of it yields dividends, but they understand that if they get a good education, this will lead to a good job, and then that will lead to higher wages. So it was a similar kind of metric. It's saying home ownership is a good investment was simply the fact that it's a smart financial decision. But people took that and began to run with it. There's entire YouTube channels here dedicated to, like Better Pockets. I subscribe to that channel. I think it's a great channel. Entire channels dedicated to using real estate as a means of income. And that is something that does skew the market. And that skews the market much bigger than even BlackRock or State Street or Blackstone or whoever you want to demonize. It's the financialization of the market. And the fact that this is happening internationally is the biggest determinant of that. When even Australia has these problems, I remember talking to an Uber driver, and people will say, well, why are you talking to Uber drivers about real estate? Well, because they come from different parts of the world, and it gives you a glimpse into what's happening with the real estate market. Even in Afghanistan, they're having a real estate crisis where their values of homes have doubled and tripled. So this is a global crisis because globally, this is a trend, the financialization of the homeowners market. So I think this is actually a greater play right now than actual liquidity and supply in the market. Yes, we still have a deficit of homes, but when you have people owning second homes, when 15% of the homeowner population is owning second homes, those are homes that could not be in the market. Now, I think the day of reckoning obviously is coming because obviously boomers are not eternal. I don't think this is coming until the 2030s. I think in 2030s it is going to be a windfall. But we'll see what happens with it. Now, at that point, there's nothing that says that those homes can't be purchased by larger institutional investors and kind of consolidated into larger groups. When those homes sell, I think it's an oversimplification to say that, oh, when baby boomers go and sell their homes, they'll just flood the market. That is one option. I actually originally thought that as well. But I think an alternative point is that it could result in institutional investors or larger homeowners coming in and purchasing these as assets in groups. So just keep that in mind. That's kind of my spiel on the housing crisis of what's going on. I think this is an international problem, but I think it really is a financial problem. This is a market trend. This isn't just about supply and demand. And in addition, I'm going to mention Home Depot into this because I think Home Depot is an interesting indicator here. And I don't know exactly what to make of it myself, but Home Depot missed their revenue. So revenue was supposed to be at 36.66 billion, and they only had a revenue of about 36.42 billion. Now, a lot of people will say that that means the housing is in a bad condition, housing is slowing, et cetera, et cetera. Maybe. But one thing I want to consider, they're blaming interest rates for this, which makes zero sense. That makes zero sense at all because interest rates have been locked for a year, and Home Depot has had the same sort of trajectory. It's only recently that their sales have been downturning. Housing could be the contributing factor because less home transactions are occurring, and housing market is slowed. But what I also think is another alternative, when people can't buy new homes or can't afford to upgrade to a larger home, oftentimes they remodel. So even though we say that Home Depot is often an indicator of new home sales, like you figure, oh, people will buy and sell new homes, they'll go to Home Depot, get new appliances, buy this, that. It actually sometimes is the inverse. In areas, and this happened during the financial crisis of 2008, when no new homes are moving, and during the 2008 financial crisis, it was a liquidity problem because banks just weren't lending. People were upgrading their current spaces. So Home Depot's miss doesn't necessarily mean the housing market is weak. Quite the opposite. It could actually mean that the housing market is too strong and people are more concerned with saving their money towards purchases rather than towards remodels. They're making do with less on the luxurious side of, oh, I want this home a certain way or I want my current space a certain way, and just focusing entirely on acquisition of a new home. That's my opinion on what's actually happening. I think even though housing is definitely hurt by what's going on right now, there's no question that interest rates are diminishing home sales. I think a larger component is people just aren't looking at upgrades and remodels. They're focusing entirely on purchases. So that's how I interpret the numbers personally. That's my narrative. Let's jump into another retailer. So as you know, we've talked about the fact that I've talked about the fact how I think major layoffs for major corporations are a market trend now. We've talked about it with big tech, but now Walmart is entering the fray as well. So now what's interesting here is Walmart is not laying off their floor or retail employees. They're laying off white collar. And this is also a trend with all the big tech companies. It seems that a lot of these layoffs are coming at the white collar level and not at the retail level, which is complicated. It could be good. It could be bad. The point is that this I feel is a market trend that is going to continue. This is going to be something that we're going to be facing for a while because a lot of these companies are noticing that as interest rates rise and their financials are becoming more and more expensive, there's no more free money. They have to make cuts because they can't afford not to. And they're going to make those cuts wherever they need help the least. And I think retail is one of those that you need people on the floor, you need people in the store, but you don't necessarily need a white collar position. So I think that's one thing that we're going to keep watching, and it's something I mentioned on the channel multiple times. These layoffs are going to continue across most major corporations. Next story I want to cover is inflation. So today, PPI numbers came off. This is the producer price index, and it was hot. The estimate was 0.3 for the month of April. It came in at 0.5, so much higher. Now, March's was actually revised down, so that's good. But this is way above estimates. Every time we've reported higher inflation numbers lately, it's only been by 0.1%. This is by 0.2%. So it's a major increase. I watched a video yesterday from a YouTuber who talked about how we're not experiencing real inflation because right now energy prices are high because of the war in Gaza, and that's not real inflation. If we took that out, energy prices would be lower and prices would go down. Or we don't have real inflation because of the issues that's going on in the Red Sea, those transportation movements. If the Houthis weren't attacking ships would be coming in more frequently, and the cost would be lower. We would have lower prices. There's no such thing as real inflation versus fake inflation. Inflation is inflation. If prices are going up, that's the only thing that matters. The reason does not matter at all. I think that is such a silly argument. It's a stupid argument. Inflation is inflation. Inflation is just a measure of if a price is up or if a price is down. The cause does not matter. The reason does not matter. Inflation is inflation. What he's trying to say is the inflation right now isn't being caused by the financial markets. In other words, this isn't because of money supply. This isn't because of something that the Fed has done. But it doesn't matter. Inflation is inflation regardless of why it happens. The biggest question is, are prices going up or are prices going down? But don't ever let someone trick you and say, oh, if it wasn't for this factor, we wouldn't have inflation. Oh, if it wasn't for the war in Gaza, we wouldn't have inflation. If it wasn't for the Houthi attacks, we wouldn't have inflation. It doesn't matter why we have inflation. We have inflation. We have to react to that market. That's not something that helps you when you go to the store. When you go to the store, you won't buy a carton of eggs and say, well, I would have paid $3 if it wasn't for the Houthis. Who cares? Inflation is inflation. So that's my rant on that. So last story I'm going to cover is tariffs. So goddamn, Biden just went crazy. So Biden is going to raise tariffs on $18 billion worth of Chinese imports, mostly focused on EVs, solar panels, and batteries. So all those fun little tech gadgets that we use and love are going to go up exponentially. So the plan is to impose a 100% tariff on electric cars, 100%. 50% on solar cells, and 25% on steel, aluminum, and metal. This actually goes well above what we currently had. So this is well above what Trump had passed a few years ago. The current tariff price on EVs is at 25%, so it's going from 25 to 100, quadruple. On solar cells, it's a double from 25% to 50%. And on metals, it's going from 7.5 to 25. This is through executive order, so it's going through pretty instantly. That is massive. That is massive. I've talked at length about tariffs and Chinese relations with the U.S. You kind of know my opinion. I think I'm more of a free trade guy. So I'm not going to go into that rant again, especially since this video is getting long. But just throwing that out there. That I reported that he was going to be passing these tariffs last week. I knew he would, but that is so much higher than what I expected. That is massive. So yeah, that's pretty much it. Hopefully I'll see you guys back here tomorrow. I hope you have a productive day. I'll see you guys in the morning.